and that's the new episode in which find out how to react to this recession narrative coming out from media from left to right, in which we'll try to also answer the question whether the inflation will eventually get worse. Are there any indicators that it should calm in the nearest time ahead? So there will be a bunch of gauges, bunch of news regarding those problems, and right after we'll jump to Crypto Outlook, in which we ponder about the future of crypto regarding what happened recently. Right after economics calendar and trade idea. So let's begin. First, let's have a look at revolving consumer credit owned and securitized. We can find that the more the consumer credit been revolved, the higher inflation pressure that might be. However, that also finds that the sentiment among customers is pretty. So the people are prone to pay and willing to pay for different kinds of goods with even with increased prices than normally, and that means that we are right now during this post-pandemic reality. So customer right now is trying to save the economy from recession, their buying power. So that's the one gauge that's positive. In terms of inflation, there are some symptoms that it might be already eased. So these are three of the key supply side factors driving today's global inflation levels, and they are already looks like be turning around, meaning relief that could be on the horizon for shoppers worldwide. These are three big inputs to global inflation that right now are peaking from them. There's Tech PC Drum, Jewelry Shipping Index, and also North America Fertilizer Index that has peaked and right now should be easing. May it get worse? I don't think so. It peaked right after this Russia aggression on Ukraine. Right now should stop, at least for a while. Another very interesting gauge for the US stock market is that US inflation surprise index is dropping right now, so the customers are already trying to adjust to skyrocketing prices of goods. It means that they're not frightened, they're trying to rather remain in a protectionism mode, I would say, and I would dare to say that we are even prepared for worse in terms of this gauge. Another one very interesting is that United States business inventories right now is reaching very high levels, so there's also a kind of deflationary indicator, deflationary gauge that may impact the prices to get finally lower. The question is why really the Fed hasn't reacted to those problems of an increasing prices to occur in 2022. They have at least 400 economists from around the world, and also over 150 research assistants on payroll that are prone to have the best real-time economic data before anyone else. That's really outstanding what happened out there that they couldn't really predict that they happen. At least in total credit and debit card spending that is remaining well above 2019 levels. There was obviously something that has already been seen previously, and we could really forecast that this trend may persist for a longer time horizon. So that's another gauge that should also turn a red signal for the Fed and its decision makers. Also, the inflationary pressure may impact GDP growth, as with high inflation that will be much more difficult to have better GDP ratings year over year, as fallout from war and also supply chain disruptions has impacted that to the extent that OECD has decided to downgrade growth forecasts across major economies. And let's have a look at this table right here. For the world, there's a revision to forecast of minus 1.5 versus December. But does it really mean that we are heading a recession? We'll probably heading a slowdown regarding to what has been forecasted back in at least December. So if the recession will come over, we will see the slowdown in inflation-adjusted consumption, as we haven't seen that. And that in the gauge that recently I've introduced, that is revolving consumer credit, at least this one, that right now is on a highest level and that haven't been registered. So we have a real M2 money stock that is showing us how Fed is going to react in the future. We can observe that this M2 growth line has been flat until 2021. Right now has skyrocketed, and it should mean that to get back to trend, the Fed either has to hold real M2 growth flat until 2025 like this, or sharply contract liquidity over the next 12-18 months. So historically, real M2 increased at a 3 to 4% annual rate. But with this Fed tightening, we may find that the market, the employment sector, may suffer, as we can find heterogeneity in labor imbalances across sectors in the US, is as pointed out with education and health servants been highly seeked. Right now we may find that this Fed tightening may even widen the gap between supply and demand of different sectors around the US. So it's not a easy nut to crack by Fed right now, especially with the CEO confidence that has dropped recently. We may find that corporate profits may also follow it, and that's not a very good environment for hiring and employment sector at all. Now let's get to crypto outlook, and I'd like to share with you what recently I found on the web. That's the chart, that the projection that has been found with a great pleasure from a crypto community. However, that's the Elliott wave theory that finds out that the fifth wave right from here on BTC will end up right around somewhere between 110,000 and 350, and that has been met with a huge applause from crypto Twitter. Doesn't mean that the fourth wave of here should have its end right at the 30,000 bucks, and it may be quite lower. So that's what I tried to clarify. It was that the Elliott wave might be helpful in terms of drawing some possible projections, but the probabilities of that one to occur are quite foggy very often. However, we may still have a rebound in a short to medium term on the crypto market, especially with such news as this: crypto in the money, traders window hinting at capitulation. However, with many of those news been based on some of on-chain Bitcoin analysis, where many of crypto whales are running away from the market. We may find that there might be a possible bottom as the price doesn't move. However, the bad news are still flocking the media. So that's why we may find that with this bearish sentiment and also this bearish media headlines, there is a good chance to rebound from here. Many of people point to capitulation, and there is a very low possibility that it will happen this time with so much bearish sentiment, because it needs much more negativity in order to push the price down from these levels as we stayed at. And another day, another exploit, this time with an optimism token that already been blessed by Vitalik Buterin, that has claimed that the non-token governance optimism solution is the one that is desirable for crypto ecosystem. This layer 2 solution is right now has suffered from exploit where token been stolen by an attacker after Wintermute sent wrong wallet address. That's why there is one recommendation for users and for those who want to join that market, is that always put money you are prone to lose into crypto, because there are so many threats around that you can't even count it. So there's a still wide west, and that will take time in which for which that will civilize, and you have to bear in mind that if you're not putting the cash into such solutions as Ethereum or Bitcoin, you might be really prone to some systemic risks. The inflation rate should turn out to show at least same level as been previously. The forecast is that inflation rate should stabilize right at these levels. Otherwise, when it will jump above any of these gauges, that will be bearish for stocks, as it will have make more room for Fed to hike interest rates further. So we do expect this one to stabilize at that point. There is a probability it will happen. So key event for this week will be introduced tomorrow at 8:30 a.m. In this episode, that's everything. Thank you very much for watching. If you found my content interesting, just hit the subscription button below the video to find out what's going on with the market, the newest and the most important news for you. So see you in the next episode.